Well, hello there everyone. Hopefully you're doing outstanding. I've had a few days of a break, I did want to make a video every day, but I've just been extremely busy with good things. Anyway, and today is Thursday, August 18th of 2022. And as always, I am not a financial advisor. I'm not a CPA. I'm not an attorney. Nothing like that. But I love talking investing. That's why I have this channel, because I love talking investing and I love sharing the message of how investing can help everyone. However, so many folks out there have closed minds to investing. They think it's gambling, they think it's risky, they don't want to do it. They just want to live paycheck to paycheck to paycheck and work until they die, I guess. But anyway, talking investing. I had a meeting last night with two individuals. We talked investing. We talked a little bit about mutual funds, a little bit about stocks, and more so about real estate. Because real estate is, in my humble opinion, the greatest way to create wealth. Okay? And I say that from personal experience. I started investing in mutual funds back in 1990. All right, in 1999, I transitioned to investing in individual stocks. From 2005 to 2018, I had a great return in stock investing. I averaged about 18% a year over that time period. 2019 and 2020, I averaged about 100% each of those 2 years. But I will say emphatically, hands down, that in my humble opinion, real estate investing beats stock investing. All right, why? Why? This is what I said last night. Basically, I can't remember everything I said. But with stock investing, you have to put your money into it. All right? If you're like me and you never made a lot of money, remember, I'm a retired police officer. I raised 2 kids. Had a German Shepherd, 105 pounds, had a cat, 2 parakeets, and I started off making $23,000 a year back in 1998 as a cop. It was not good pay. So anyway, you have to put your money into the stocks and let it grow. Okay? And that's okay, because as I found, it can grow. But if you don't have a lot, it takes a long time. If you read financial articles and such, a lot of times they'll say start investing in your 20s, work till you're 60, 65, and by the time you're 65, you'll have $1 million saved up or whatever it might be, growing at whatever percentage a year. Okay? Okay, that's better than nothing. However, in late 2016, I started thinking about rental property. I bought my first rental house in January of 2017. December of 2017, I bought my second rental property. May of 2018, I bought a triplex. August of 2018, I bought my first out-of-state house. The first triplex and 2 single-family homes were in Virginia. The first out-of-state house was in Birmingham, Alabama. Okay? So when I wrapped up 2018, I had 6. I had 6 rental units, a triplex, 3 single-family homes. All right? So in 2019, I ended up selling one of my single-family homes. I had not planned to sell it. I had wanted to renew the lease with the tenants that were in there, and I had increased the rent something like $25. They refused to pay it. They said they did not want to pay it. I said, okay, I will let you go month to month while I figure out what I'm going to do. And I told them, I gave them notice, and I said, what I figured out is I'm going to sell this house. I had a variety of reasons for selling it. I made the offer to them. I said, if you want to buy it, you get first dibs. All right, I'll cut you a better deal than if I advertise it, because I won't have to use a real estate agent. They let me know a couple days later they couldn't swing it. So, okay. So I put it on the market, and it did sell pretty quick, within a couple of days. This was in 2019. And when I sold it, I got back my down payment. I had put 20% down, and I bought it for $97,500, and I sold it for $130 something. So I got back, after my realtor fees and closing costs and whatever it was I paid, I got back 40-ish thousand, maybe 45, I forget exactly now. It's been a couple years. And I basically took that money and turned it into buying 4 more rental properties. That one rental house was cash flowing somewhere between $250 and $300 a month. I bought 4 properties. Let's say they all cash flowed $250. Okay, now I'm cash flowing $1,000, not just $250, but $1,000. All right, that's an improvement. And now I have not one house appreciating, but 4 houses appreciating. Not one house having the tenants pay the mortgage down, but 4 houses paying the mortgage down. There's strength in numbers. All right. So anyway, as 2019 played out, I got additional properties. I bought properties inside of my self-directed IRA. I bought some other properties. I forget, I don't have my notes in front of me. I forget the order now, but I'm not going to cover that. But then in 2020, that's when I sort of exploded. I think in 2019, I bought 9 houses. I sold 1. So net gain was maybe like 8 houses. 2020, I bought something like 14 properties. All right. 2020, if we think back, what was happening? COVID was kicking off. People were saying real estate was too expensive. People couldn't find good deals anymore. I bought like 14 houses. So I rounded out the end of 2020 with 25 rental properties. I closed on the last 5 that I bought late December of 2020. All right. So then 2021, the holidays of 2020, I remember telling some family members that I was planning to move to Florida. And they asked me when. And I said, I don't know. It may turn out to be sooner than what I know. It may turn out to be sooner than I expect. I'm not sure. That was in December of 2020. In March of 2021, I closed in this house that I am in right now. Okay. And I packed up and moved to South Florida. All right. So what I found out, what I realized from 2017 to end of 2020, all right, we're talking like, I went from 0 rentals to 25 rentals in 47 months, roughly. Let's just say 4 years. What I realized during that second year, I believe it was that if I ran the numbers, real estate beats stock investing. And I was like, well, how is this? How? I was getting 18% in stocks. How is real estate beating it? And what I learned, what I figured out, is that it's due to the fact I'm using other people's money. OPM, other people's money. I'm using the bank's money. And I put 20% down. They give me 80%. And yet I get to keep 100% of the rent after the rent pays that mortgage. But if rents go up, the mortgage stays the same. It doesn't increase. It might fluctuate a little bit due to escrow accounts and tax and insurance, but the principal and interest stays the same. But rents do go up over time. I don't have to pay the extra rent to the bank. It goes to me. Houses do appreciate over time. I don't give that appreciation to the bank. It comes to me. Okay? So, with that being said, other people's money can help out tremendously because you can use less money to buy something worth more. All right? You can't do that with stocks. If you do it with stocks, it's called margin. And it's extremely risky because you can lose it all. Real estate is relatively safe. You have to know what you're doing. You have to know how to run your numbers. All right, I got a video about running your numbers, but I'll recap it real quick. When you get your rent payment in, you have to pay your mortgage, taxes, insurance, principal, and interest. Okay? There's more to pay besides that. You have to pay a property manager if you have one. All right, that might be 8%, 10%, 11%. You have to pay your property manager, and you have to hold money out for vacancies, repairs, and capital expenditures. I usually hold out roughly 20% of my total rent. So if I have $1,000 rent, I hold out $200 for vacancies, repairs, and capital expenditures. That will go in the bank because you will have vacancies where you still need to pay the mortgage. You will have repairs. The kitchen sink will be leaking. You will have capital expenditures such as all houses eventually need a new roof. They might need new windows. They might need new HVACs, et cetera, et cetera, et cetera. Okay? So you better save up some money to cover these costs because if you don't, you'll be up that creek without a paddle, and you don't want that. All right? So talking investing. The other thing you can do with real estate, there are times, if you so desire, you can recycle capital. How do you do this? If I sit down and I calculate out how much money I've spent out of pocket for my rental properties, it's not that much per se, okay? Because what I've done is I referenced selling a house and buying four. I had appreciation. Yes, I got my down payment back, but I had appreciation. That cash bought four more. I refinanced the triplex that I owned and the very first single family home that I bought. And I pulled out roughly $65,000 in cash. I increased the mortgages. My cash flow decreased, but I kept positive cash flow. All right, it did drop below my normal minimum requirement of $250 a unit, okay, but not by that much, but it did drop a little bit. The reason I did it was because I knew with that cash, because I don't like having less cash flow, but I knew with that cash, I was going to buy more real estate. And what I did with that $65,000, I bought 9 houses. I used seller financing to do it, so it was less money out of pocket. I didn't have to pay any closing costs to a bank and stuff. I still had to pay a title company their fees, but not the bank's closing costs. So I bought those 9 houses using cashback refinances using seller financing. Okay, I have in that time period since then, I sold another house that I bought, got cash from it. I have recently refinanced a house up in Indiana. I've got cash from that. You know, same thing, it's appreciation. I might pay to rehab a house. I might put $10, $15, $20,000 into a house, but it increases the value $40, $50, $60, $70,000 sometimes, and then I refinance it. The cash flow on the houses may drop, such that one in Indiana. My cash flow is pushing $600 for that house. It dropped to whatever it dropped to. I think it's $300 it dropped to. But I now got a chunk of cash back that I can deploy into other investments. Okay, that's the beauty of real estate. You can do something like that with stocks, but it's different. It can be risky, and it's always your money. With real estate, you get to use other people's money. So when you talk investing with others, try to explain those points, because if someone can really grasp that concept. And one last concept to grasp, and this is key also. This is very key. Stick around to the end. It'll only take a couple minutes. If you invest in stocks, mutual funds, a 401k, whatever, and you get $1 million, you have what's called the safe withdrawal rate. The Trinity study back in the 90s references. They came up with 4% is a safe withdrawal rate. More recent studies have said a safer rate is like 3.6, 3.7, something like that. But let's just say for easy math, it's 4%. If you save up a whopping $1 million, that's a lot of money. 4% of that for a year is $40,000. If that's what you're living off of, can you do that? Is that the same as what your paycheck is right now? Is it less than your paycheck? Can you afford to live off 40 grand? Or could you save up $2 million? Save up even more and now withdraw $80,000. Is that enough? Could you do that? You can do that, but unless you have a high paying job, it may take you a long time to save up $1 million, not to say $2 million or more dollars, okay, to invest it. But if you start buying real estate from that very first rental property, you might get $250 a month. It's not a lot of money, right? $250 a month. But it's $250. If you get a second one, now you're at $500. Say you get 4, you're now at $1,000 a month. That's $12,000 a year just for having 4 houses. It's pretty easy. And over time, the rents on those 4 houses will increase. It might not increase a lot, but if every house increased $25, that's $100 more a month. If it increases $50, that's $200 more a month. And that's just for 4 houses. If you get 25 houses and rent goes up $25, $50, $75, $100, whatever, it goes up exponentially, even more. Okay? You can be 20 years old and buy that first rental property and get that same $250. Why put it in your 401k? Why put it in mutual funds or stock investings or ETFs or crypto? Why do any of that? buy that first rental property, get that $250, save that $250 positive cash flow, add it to whatever you're saving from your paycheck, and then buy your second one even sooner. Now you're getting $500. Save it. Add it to your paycheck, whatever you're saving for your paycheck. Buy your third, buy your fourth, buy your fifth. If you started this when you're 20, I'll pretty much guarantee if you want to, you can become financially independent probably easily by the time you're 30. You can do whatever you want if you're financially independent within reason. Okay? If you're 30, maybe you can be financially independent by your 40. It's better than 60. So why not? Why not? All right, so anyway, I could keep on talking because I love talking investing. So if you want to meet up sometime, we can talk investing. And before you sign off, click links below for Amazon, and it's a way to give back to me. If you purchase one of those real estate books, it helps you. But if you open a window and buy anything on Amazon, I'll get a very small commission fee, whatever they call it, like less than $1 probably. Unless you bought something for buku bucks, I can make it more. But probably less than $1. But it's just something little to reimburse me for my time, wear and tear on my phone, etc., etc., etc. All right? So anyway, good enough. Y'all have a great day. Stay safe in all you do and keep loving life. Mazske is signing out.